Today, we're going to talk about one of the most significant transformations in global finance since the invention of correspondent banking. And it's all happening right on the XRP ledger. The XRP ledger has become a complete ecosystem that combines an institutional grade automated market maker, highly liquid decentralized exchange, prime brokerage access, and global cross border payments and settlement, and regulatory compliant stablecoins in one unified solution. On March 22nd in 2024, there was a major milestone that was reached when the automated market makers launched on the XRP Ledger mainnet. Unlike Ethereum's smart contract-based market makers, the XRP Ledger's AMM function is built directly into the protocol. That design makes them more efficient, secure, and better suited for institutional use than a lot of other options. And today I'm going to show you exactly how this changes everything, not just for crypto, but for the entire global financial system. And we're going to talk about why XRP sits at the absolute center of this transformation as the preferred bridge asset that makes it all possible. Every single day, SWIFT processes trillions of dollars in cross-border payments. And that means every year, quadrillions in value is flowing through a network of correspondent banks that was designed in the 70s. And we've talked about this at length, but the result is that international payments take days to settle and have lots of added fees from intermediary banks that each take their cut. So Ripple's CEO Brad Garlinghouse said recently that the XRP ledger could capture 14% of this huge capital flow through SWIFT. And that target seems pretty realistic due to the technical skills and institutional partnerships that they've developed over the past decade. Now, if you haven't dug into this topic, I want to explain briefly how traditional correspondent banking works. And for those of you that are already deep into this topic, just bear with me for a minute. So if you want to send money from a small bank in Thailand to a small bank in Mexico, your money might bounce through 4 or 5 intermediary banks before it reaches its final destination. Each bank maintains accounts with other banks called Nostro and Vostro accounts, and those accounts tie up enormous amounts of capital that could be used more productively elsewhere. The XRP ledger removes a ton of friction and solves the need for maintaining pre-funded accounts across hundreds of banks. Financial institutions can use XRP as a bridge currency for instant settlement, but that only works if there's enough liquidity in the system to handle large transactions without massive price swings. And so that's where automated market makers can have a huge impact, but not in the way that most people think. Most people hear automated market makers and think about Uniswap or PancakeSwap, which are smart contracts on Ethereum that let you swap tokens. But what's happened on the XRP ledger is fundamentally different and way more sophisticated. Since the XRP ledger's automated market maker is built directly into the protocol, it's eliminated the smart contract risks that exist with other solutions while reducing the gas fees to almost nothing and creating a seamless integration with the existing central limit order book that's been running since 2012. In practical terms, that means when you trade on the XRP ledger, the system automatically finds the best possible price for you. It checks both the traditional order book and the AMM pools, and then executes your trade using the most favorable option. And that all happens automatically with no extra fees or complexity. And one of the most clever parts of the design is that the XRP ledger uses something called auto-bridging. That means that even if there's no direct trading pair between two assets, say Japanese yen and Brazilian real, the system can automatically route your trade through XRP as an intermediary. One transaction becomes 2 seamless swaps, yen to XRP, then XRP to real. If you have just one asset paired with XRP, then there's only one trading pair, that asset and XRP. There's nothing else to connect it with. But if you start adding a second asset and it's also paired with XRP, you suddenly have 2 trading pairs created with the first asset to XRP and the second asset to XRP. Because both are linked to XRP, you can trade between those 2 assets by going through XRP in the middle. So even though they're not directly paired with each other, XRP lets you move from one to the other, and that gives you an extra trading path. As more assets get added and each one connects to XRP, the number of possible ways to trade between them keeps growing. So instead of needing a direct connection between every single pair of assets, each one only needs to be linked with XRP. Then XRP handles the swap between any of those 2. This all makes the whole process way simpler, faster, and more scalable. And the platform also offers several more unique features. For instance, it has a continuous auction mechanism that allows arbitrageurs to bid on 24-hour trading fee discounts, and if they win, they only pay 10% of the normal fees. Additionally, liquidity providers can vote on fee structures ranging from 0 to 1%, and that allows them to optimize fees dynamically based on real-time market conditions. And the XRP ledger has built-in safeguards to protect participants from common exploits that are found in a lot of automated trading systems. One of the most well-known exploits is the sandwich attack, where someone spots a pending trade and then places one order just before it and another right after it. That forces the price to shift in a way that gives the attacker a better profit, while the original trader ends up with a worse outcome. They call it a sandwich attack because it comes from the idea that the victim's trade is caught in the middle of the attacker's 2 orders, like a spicy chicken breast patty at hostage liquidity. And so to address this type of manipulation, the XRP ledger introduced automatic safeguards called auction mode. And that's when the market becomes highly volatile, the system can automatically switch from regular trading to batch processing using short timed auctions. By grouping those trades together instead of processing them one by one, that makes it a whole lot harder for attackers to predict and exploit individual transactions. And as a result, liquidity providers and traders are better protected, even in an unstable market. And now, to build on this feature set, in April of 2025, Ripple acquired Hidden Road for $1.25 billion. And that acquisition is a massive change for institutional access to digital assets. Hidden Road is a global multi-asset prime brokerage that processes around $3 trillion annually across more than 300 institutional clients. To put that in perspective, that's larger transaction volume than most traditional banks. And what a prime brokerage does is offer several super important services that are needed for financial institutions, like clearing, securities lending, and executing leverage trades. It also manages risk and provides custody services. And all those are the types of features that are needed for the world's largest financial institutions. Now imagine if all of those services are running on blockchain infrastructure with 3 to 5 second settlement times instead of traditional 1 to 3 day settlement cycles. And the strategic rollout plan for this is actually a pretty big deal. Ripple's US dollar stablecoin, RLUSD, is being positioned as the core collateral across all of Hidden Road's prime brokerage services. That means that institutions can use RLUSD to support multiple trading positions at once without needing to move funds back and forth between different accounts or platforms. That matters because one of the biggest problems that institutions face is fragmentation. Assets are really locked in separate systems a lot of times, and they don't talk to each other. That creates delays, extra costs, and limits how efficiently firms can manage their capital. By using RLUSD as a common form of collateral across both digital assets and traditional markets, firms can streamline their operations and respond faster to market changes. It lets them shift funds around, rebalance positions, and manage risk all in real time without needing to unwind trades or transfer cash between different environments. And that kind of flexibility is huge for serious market players that need speed and scale. And so with that, RLUSD now becomes the first stablecoin built in to support cross-margining between both traditional financial markets and digital asset markets. And that's something that financial institutions have been waiting for, since it helps reduce risk, simplifies operations, and frees up capital that would otherwise sit idle. And so it fills a major gap that's been slowing down serious institutional adoption. Let me give you an example of why this matters. Currently, if a hedge fund wants to trade both traditional Forex and crypto, they need separate accounts. They also need separate collateral and separate risk management systems. And with Hidden Road's integration into the XRP ledger, that same fund can use RLUSD as collateral for both their traditional FX trades and their crypto positions, all settling on the same blockchain infrastructure. And Hidden Road's clients now get access to post-trade operations directly on the XRP ledger, which cuts down settlement times from as much as 24 hours to just 3 to 5 seconds. For firms handling billions of dollars in daily transactions, that kind of speed becomes a major edge. And faster settlement means less capital is tied up, with lower risk and quicker access to liquidity. As more institutions start using this system, the difference in speed and cost compared to traditional processes is going to become way too large to overlook. At some point, staying with the old, slow infrastructure may not just be inefficient, but it's probably going to start to look more like a risk in itself. But there's another part that makes Hidden Road's integration super important, and that's derivative settlement. The global derivatives market is enormous, and while it's tough to pin down an exact figure because of how the system works, most estimates place the notional value between somewhere from $600 trillion to well over $2 quadrillion. Either way, that's more than 7 times the size of the world's GDP. And despite its scale, this market still runs on settlement processes that are slow, complex, and layered with lots of risk. Trades can take days to clear, ties up capital, and exposes firms to counterparty risk the longer that things stay unsettled. So being able to settle derivatives in seconds using a system like the XRP ledger is really transformational. It takes one of the slowest and most complicated parts of finance and makes it faster, simpler, and potentially a lot more transparent. You can think about a hedge fund that might be looking to protect itself against changes in oil prices by using crude oil futures. They place the trade, but what usually follows is a long process that involves a whole lot of clearinghouses, margin checks, daily price adjustments, and a network of counterparties. From beginning to end, that can take 2 or 3 days for everything to fully settle. And during that time, the fund is exposed to risk and capital's tied up, and there's always some uncertainty about whether every part of that process is going to go the way they want it to. Now picture that same trade settling on the XRP ledger in just 3 to 5 seconds. With that, there's no delay from a clearinghouse, no settlement risk, and no second guessing whether the other party is going to come through. The trade executes, the collateral moves instantly, and both sides know their exact position in real time. And Hidden Road's already piloting this system with several major clients and using RLUSD for daily margin payments between derivatives traders as market prices shift. And that's known as the variation margin. So traditionally, if your position moves against you by, say, $1 million over the course of a trading day, you need to send that margin payment to your counterparty through a wire transfer, often routed through a few correspondent banks. And that transfer might not settle until the following business day, which exposes both sides to settlement risk during that delay. So with the XRP ledger, that same $1 million payment in RLUSD can be completed and finalized within a few seconds. And that removes the risk of waiting on a delayed transfer and gives both parties immediate clarity. Faster settlement means that firms don't have to overallocate funds just in case. They can hold less capital in reserve, and that lowers their overall costs and frees up liquidity. And when capital becomes cheaper and markets move more efficiently, that translates to better pricing and tighter spreads for everyone involved. And so, as it sits, Hidden Road's clients can expect a 60 to 80% reduction in settlement-related capital requirements when they're using the XRP Ledger's infrastructure for derivatives clearing. And so now, that capital can be deployed productively instead of just sitting in an account somewhere covering settlement risk. And this gets even more significant since the XRP Ledger's auto-bridging functionality works for derivatives. One example we could use is a Japanese bank that's wanting to hedge currency exposure against a Brazilian real. They don't need to find a direct counterparty. The XRP Ledger can automatically create synthetic exposure through XRP-denominated derivatives. And that opens up liquidity across some previously fragmented markets. And so the effects of that extend way beyond Hidden Road itself, with major institutions including SBI Holdings 61 Bank Consortium, Santander, MUFG, Standard Chartered, Bank of America, and others all having implemented various forms of Ripple software suite. Through all of this transformation, we've had an explosion of stablecoins on the XRP ledger, and that's why this creates a perfect storm for XRP's demand. So RLUSD launched in December of 2024 with full regulatory approval, and a lot of people still aren't grasping the importance of how RLUSD operates with the monthly third-party audits, over-collateralization of the reserves, and most importantly, being designed from day one for institutional use. With the rollout of the AMM clawback amendment being activated, that solved a fundamental problem for how regulated stablecoins can participate in DeFi while maintaining the issuer controls needed for compliance and fraud prevention. And the answer with this was to allow compliance-enabled tokens to participate in AMM pools while preserving regulatory oversight capabilities altogether. But RLUSD is really just the beginning. The broader stablecoin ecosystem on the XRP ledger includes Circle's USDC, which brings in massive liquidity and institutional trust. And there's also Schumann Financial's Europe, which is a MiCA-compliant stablecoin for European markets, and StraitsX Singapore-regulated XSGD that targets Southeast Asia corridors, and Brazil's USDB and BBRL stablecoins that are capturing the Latin American markets. And so we're going to keep seeing more stablecoins enter the XRP ledger ecosystem because the infrastructure is built to make stablecoin issuance super easy. One feature is that the XRP ledger's built-in gateway functionality that allows any regulated institution like a bank or financial provider to issue their own stablecoins really fast with minimal technical overhead. And that feature is baked directly in the core of the XRP ledger. That means issuing a stablecoin can be done in just a few steps while still meeting compliance and operational requirements. And so as more institutions realize how simple and secure it is to launch directly on-chain, the stablecoin ecosystem on the XRP ledger is set to grow really fast. You can think of gateways as official on-ramps to the XRP ledger. A bank, payment processor, or licensed money service business can become a gateway and start issuing digital representations of any currency they hold in reserve. And that gateway system is about to explode. We're already seeing major institutions lining up to issue more stablecoins. Circle's USDC integration was just the beginning, and the real opportunity is the regional and specialized stablecoins that serve specific markets. And so every new stablecoin that launches creates exponentially more trading pairs and liquidity pathways, with XRP sitting right at the center as a universal bridge. And so we know from industry sources that at least 3 of the top 10 U.S. banks are already in advanced discussions about issuing U.S. dollar-based stablecoins on the XRP ledger. There's 2 major European banks that are preparing euro-denominated tokens, and several Asian banks that are exploring yen, won, and rupee versions. Unlike other blockchains where stablecoin issuers compete with each other, the XRP ledger creates a positive sum dynamic that every new stablecoin makes every existing stablecoin more useful by creating new liquidity pathways and trading opportunities. And so suddenly you're going to have direct trading pairs between emerging markets with currencies that never had deep liquidity before, and they're all going to be able to be connected through XRP's bridging network. And so for remittance, this is a huge deal. If you're sending money from the Philippines, for example, to Nigeria, it might require converting pesos to dollars, dollars to euros, euros to naira, with fees at every step of the way. With native stablecoins on the XRP ledger, that becomes a single transaction. Every stablecoin transaction on the XRP ledger also burns a small amount of XRP as the network fee. And so over time, those micro burns reduce the total XRP supply and create a slow but steady deflationary effect. But what's even more important is how XRP functions as the universal bridge asset within the system. Say someone wants to swap RLUSD for EUROP or USDC for XSGD or whatever the case is. XRP is often going to act as the connector in those trades. It moves in the middle and links those two stablecoins that might not be directly paired. And that creates real utility demand for XRP, driven by actual volume of stablecoin activity. So as stablecoin usage goes up, more XRP gets used to bridge trades and more transaction fees get burned, and then more liquidity flows through pools that are priced in XRP. So what's happening here is a kind of compounding effect. Each new stablecoin that gets added to the network doesn't just add value by itself. It also unlocks a whole lot of new combinations and trading paths between all of the others. And that expands the system as a whole. And right at the center of it is XRP, acting as the glue that holds the entire ecosystem together. And so one thing that a lot of XRP holders don't really fully appreciate is that XRP does have a structurally advantaged position within the XRP ledger DEX, and that becomes more valuable as the ecosystem grows. Unlike other assets on the ledger, which are represented as IOUs or tokens, XRP is the native asset, and that gives it several unique advantages that compound over time. Since XRP serves as the optimal bridge asset for cross-currency trades, the auto-bridging functionality means that XRP naturally becomes the intermediary for trades between any two non-XRP assets, and creates constant utility demand. And that creates what economists call a network effect, or Metcalfe's law scenario. And so as more assets join the XRP ledger ecosystem, the utility of XRP as a bridge currency increases exponentially. With hundreds of assets that are already on the ledger and more being added regularly, this network effect is continuing to accelerate. And so with all the assets that are already on the ledger and more being added regularly, this network effect is really starting to accelerate. And so we're really witnessing the assembly of the first complete institutional DeFi infrastructure that bridges traditional finance with decentralized systems. The foundational layer is the XRP ledger itself, with over 10 years of error-free operation and a federated consensus mechanism that stands the test of time. Layer 2 is the protocol-native AMM system that provides deep liquidity across hundreds of trading pairs, with XRP serving as the universal bridge asset connecting all value transfers. Layer 3 is the institutional infrastructure through Hidden Road, providing traditional prime brokerage services with blockchain settlement efficiency. Layer 4 is the regulatory compliant stablecoin ecosystem that enables global value transfer without having traditional bank intermediaries. All the stablecoins issued on the XRP ledger provide stable value storage while flowing through the AMM system for instant conversion. And Layer 5 is full EVM compatibility, and that enables Ethereum-compatible smart contracts on the ledger. That opens up the door for sophisticated DeFi applications while maintaining the connection to the main ledger's institutional-grade infrastructure. And what makes this ecosystem particularly powerful is really how it solves one of the biggest challenges in DeFi adoption: institutional compliance and risk management. Most DeFi platforms fall pretty short in what you could call a compliance gap. They offer a big range of financial tools, but lack the kind of regulatory oversight and compliance features that institutional partners absolutely need. And that's been a major roadblock for banks and other large firms that are looking to enter the space. The XRP ledger ecosystem is now actively closing that gap, and Ripple has been building an institutional-grade DeFi suite that combines AMM-based liquidity with built-in compliance infrastructure. And as part of that effort, Ripple's been working directly with banking partners to create a transaction monitoring tool that can detect and flag suspicious activity within the AMM pools. And at the same time, they're using zero-knowledge proof technology to preserve user privacy. So monitoring doesn't come at the cost of data security. There's 3 major banks in Southeast Asia that are already testing this system. And if this is successful, this could offer something that the rest of crypto hasn't been able to really deliver: a working, scalable bridge between DeFi and real-world regulatory standards. And that gives the XRP ledger ecosystem a strong early advantage in the race to bring institutional finance into decentralized markets. The multi-purpose tokens, or MPT functionality, is going to enable tokenization of complex financial products like bonds, equities, and derivatives. And so that targets trillions of dollars in real-world asset tokenization opportunities. And so the XRP ledger ecosystem isn't a walled garden. It's continually establishing new connections to every major blockchain network, and that's creating unprecedented interoperability and liquidity flow. Projects like the Flare network and Axelar are helping to expand the XRP ledger's reach in ways that matter a whole lot for institutional adoption. Flare's F-asset system allows assets like XRP to be used in smart contract environments, which opens the door to more complex financial use cases, without compromising security or performance. And at the same time, Axelar's integration with the XRP ledger connects it to more than 70 other blockchains, and that means that assets and applications on the XRP ledger can now interact with a much wider ecosystem. So that creates a massive web of interoperable liquidity. For institutions, this kind of seamless cross-chain access removes the silos and unlocks new trading opportunities, and also strengthens the use case for the XRP ledger. And so all these elements are super powerful when you combine them with AMMs providing the essential liquidity layer that makes cross-chain applications viable. Each new connection increases the utility and demand for XRP as the universal bridge asset. Ripple's own research indicated that the XRP ledger requires around $1.5 billion in AMM liquidity across all the currency pairs to process about 90% of on-demand liquidity transactions with minimal slippage. And so considering the growth rate and institutional partnerships, that target seems pretty achievable. And so this system is being built from scratch to really redefine how value can move globally. And it's doing it all with XRP as the central element that really brings everything together. Each part serves a specific role, and the design cuts out the delays and friction of correspondent banking, but still supports the kind of oversight and risk control that large institutions expect. The stablecoin layer offers a reliable way to store and move value without relying on banks to sit in the middle. And the automated market maker brings deep on-chain liquidity across hundreds of asset pairs, and that can pull traditional and decentralized finance into one unified network with XRP at the center of it. And so some of the more conservative price projections for XRP are based on the idea that it could just capture 5 to 10% of the volume currently processed through Swift. Now, if Brad's estimate of hitting roughly 14% of Swift's volume ends up being accurate, any increase in XRP's value wouldn't be fueled by short-term trading or speculation. It's going to come from actual utility-driven demand. With XRP positioned in the center of the global settlement flows, the more the network is used for meaningful activity, the stronger the economic pressure behind XRP's price. And that creates a flywheel effect for network liquidity that attracts more use cases and adds more liquidity. And so with so many isolated crypto use cases, the XRP ledgers become the most complete financial infrastructure on the planet, with real banks, real money, and real solutions. Just think about it for a minute. The XRP ledger provides automated market makers that actually work for institutions. It offers a massive prime brokerage, stablecoins that regulators approve of, and settlement times that make traditional banking seem ancient. And so here's the bottom line. You're playing a part in creating the next global financial system. And if you grasp what's really going on, you're never going to view XRP in the same light again.